The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon, everybody. Welcome to the Main Street Code for your financial success. When we talk about code, we've been talking about choice, organization, direction, and education. I'm thinking of changing that to communication, organization, direction, and education. But anyhow, we work with hundreds of advisors across the United States, attorneys, financial advisors, and clients call us for their complicated insurance issues and for basic needs, life insurance, long-term care, and annuities. And, we've had a crazy week. Listen, interest rates are going up like crazy. We've been talking about it week after week. And the banks have responded by giving you higher and higher mortgage rates. But at the same time, they haven't given you higher rates on your CDs and your fixed money. And there are options out there. And with the inflation going up and with the market being crazy, we have fixed, guaranteed options paying over 3.5%. And guess what? They're in annuities. You're not taxed on them every year like you're on your CD and your money market. Well, anyhow, I had to say that again. And there's another thing that happened this week that I just want to discuss that just happened in the last 2 days, where we've seen cryptocurrency take a big dive. Now, the significance of cryptocurrency taking a dive, and I'm not going to give you a market analysis. That's certainly not my area of expertise. But I do have some millennial children, and of course I know their friends, and I know the mentality of a lot of the mentality has gone into this crypto space. But in addition to going into crypto, many of these people have gone into margin. And what margin is I'm going to double my bet by borrowing money to buy more shares of something. And crypto, they've made it very easy for young millennials to invest and borrow money that they may or may not have. And this may be their first revelation in a long time when the market dips like the way it does, or if you're heavily involved in crypto and this, what I would call this speculative currency. And when that dips, all of a sudden you get something called a margin call. And when you get a margin call, you've got to come up with money to pay for the money you borrowed. Or you got to sell everything to pay off everything that's borrowed. And hopefully you're not underwater, because then you might have to sell other assets. So this is a very tricky and slippery slope for those of you that have to borrow to sell things. And this happens in business all the time. Today, we are very fortunate to have a friend of mine who I met in New York City, Adrienne Woods. She's an attorney, and she is a bankruptcy attorney. And Adrienne, would you introduce yourself, please?
Hi, Neil. I'm Adrienne Woods. I am, as Neil mentioned, a bankruptcy attorney. I practice specifically in the area of bankruptcy for individuals and small businesses under Chapter 7 and 11, which means I assist my clients in liquidating or restructuring.
Very good. Now, Adrienne, I know a lot of attorneys. I know a lot of bankruptcy attorneys. I know a lot of accountants. I know a lot of insurance advisors. I know a lot of people. And to give a global view of what's going on, not just in my profession, in your profession, banks are merging, Big accounting firms are merging all over the place. Big. Big is bigger. Banks are bigger. Law firms are bigger. Insurance firms are bigger. But what happens when all this consolidation goes on is you lose that individual attention to you and details. And I always talk about being the quarterback for you, not just in your insurance area, but insurance, legal, investments, and accounting all interplay in your financial well-being. Wouldn't you agree with that, Adrienne, I'm sorry.
Absolutely.
Yes.
Absolutely. There's a lot of crossover in all of those areas.
Right. So what happens is, you need a quarterback. You need to put together your own team. And the one team that most people don't have is that what if scenario. What if I'm facing bankruptcy? Or what if, and it's not always your fault. I think people think that bankruptcy, and Adrienne, you deal with this more than I do, people take it personally like they failed. Would you agree with that?
That's very good. Absolutely. And it's a really unfortunate thing for multiple reasons. First of all, people shouldn't feel badly about bankruptcy. Our forefathers built it into the U.S. Constitution in recognition of the fact that in order to have a thriving country, we need to be comfortable with the fact that sometimes risks are not going to pay out. And we don't want to make people feel like they shouldn't be able to take calculated risks. It's not good for the individual and it's not good for society. Otherwise, who's going to provide jobs? Who's going to provide vendors? Who's going to fill all of these important roles, right?
Right. And it's not always a risk that you took, but it could be unforeseen circumstances. COVID was a great example. Some businesses thrived during COVID and actually got bigger and bigger, and many businesses failed. Not because they didn't have a good business necessarily, but some economic factors, whether they couldn't get supplies or they couldn't get help, which is a big problem here on Long Island, created problems. Now, we experience this with caregiving and long-term care, and we experience this in business, and we may experience this in our personal lives where we have a crisis where we're invested in Bitcoin, we got a big margin call. So we may have personal crises that we run into and think, oh my God, I've got to sell this and sell that and sell this asset and sell that asset. And you may be doing the wrong things because you didn't ask the right people. Don't always ask people when you're doing great. Even ask people when something's going wrong. What should I do? And ask experts. Adrienne, would you expand on what I'm trying to say here?
Absolutely. And I think what you're trying to say, and very well, is that the panicked knee-jerk reaction is invariably not the right one. People, I'll give you a great example. People come to me frequently after something really bad has happened or after they've already exacerbated a really bad situation, trying to solve it on their own. A good example I can give you is a couple of years ago, I had an individual come to me who was a subcontractor. He wasn't getting paid, as subcontractors often don't. Couldn't pay his employees. And so, employees don't show up to work when they don't get paid. This is not a mystery. So inevitably, he used the company's money to pay the employees. He didn't realize that, first of all, you still have to take withholding tax out. So by the time he came to me trying to solve his own problem and finding that he had run out of money to do so, I had to tell him that he was now about $12 million in the hole for trust fund taxes that are not dischargeable in a bankruptcy. So I couldn't help him,
right?
Which was frustrating because had he come to me at the beginning of the issue, I could have explained to him how he might have gotten himself out of the difficulty without having to incur all of this liability.
Absolutely. Now, the products I represent, we talk about protection, whether it's for life insurance, whether it's for disability, whether it's for long-term care. These are protection products. And annuities and 401ks and IRAs, but they're creditor protected as well. And this is a humongous thing. And What do I mean by creditor protected? What I mean is this, very simple. If I own an annuity and I have, a lot of my money in an annuity, not a CD or a bank, and I'm facing personal financial difficulties, or my business is facing personal financial difficulties, and I got a lot of money in retirement, don't get rid of that because they can't touch that money. Correct?
Neil, that is so true. And that's another great example that I can give you where I've had on multiple occasions individuals who panic because they get huge credit card bills for whatever reason. I mean, look, I'm not here to judge or place blame. I'm here to help people figure out how to solve problems. But regardless, when somebody decides that they're going to sell a retirement asset to pay off something that we could discharge in a bankruptcy, it's so frustrating because they're giving away money.
Right. Well, listen, we have to go to commercial break now, but you're listening to Adrienne Woods. If you want to get a hold of her, she's at 917-447-3321. And of course, this is your host, Neil Himmelstein. I can be reached at 631-647-4694, and we'll be right back. Welcome back to the Main Street Code for Financial Success. This is Neil Himmelstein, your host. If you ever need to get a hold of me, you can get me at 631-647-4694 or my new email address at themainstreetcode.com. And today we are with Adrienne Woods. Adrienne Woods is an attorney, a bankruptcy attorney, and she gives you that individual personalized care that you're not going to get anywhere else. I can guarantee you that. And if you're in any kind of situation whatsoever, even before bankruptcy, maybe you can avoid bankruptcy, maybe you need bankruptcy, you want to talk to someone about it, Adrienne's the person you want to talk to. And before the break, I gave Adrienne's wrong phone number. Adrienne, what's your correct phone number? I don't want to do that ever again.
Thanks, Neil. People can reach me at 917-447-4321.
Right. And what I want to get back to, it's so important to have people, I was telling before the break, to have people that you can call and talk to when you're doing good, when you're doing bad. We coordinate with a lot of attorneys, a lot of accountants, and a lot of financial advisors. Ask us, what's the right product? What's the right thing? How do you, connect the dots. Every day I get a call, connect the dots, or I'm in between jobs, or this or that, or any type of crisis. You want to know that you have people to call. And that's kind of our motto at the Main Street Planning Group, or, that's what we do, is we help you. But we're experts in the area of insurance, annuities, life insurance, and long-term care, and that's what we do every day. Before the break, we talked about another thing. We talked about if you're in a panic situation, there are certain assets to protect and certain assets not to sell, because some assets are protected from the IRS and from your creditors from taking away. And I just had a situation, which I spoke about a month ago. A good friend of mine, 57 years young, passed away. Luckily, he had a life insurance policy, but he had a lot of credit card debt. I mean, a ton of credit card debt. Some of it was in his name. Some of it was him and his wife's name. And he got a nice life insurance check, but thank goodness he had that. Very big mortgage. 2 kids ready to start college. 2 kids that graduated from college. Student loans. Pretty complicated mess. But now the mess is clearing it up. So now creditors are calling. So Adrienne, what are the first things that come to your mind, you not even knowing the situation? I'm putting you on the spot here.
Okay, so the first thing is I would want to have a thorough consultation with the wife of the decedent, because, we need to know the whole picture before we can give advice on any one component.
Exactly.
Because you don't know the interplay until you know all of the components. And a knee-jerk reaction would be to say, do X, don't do Y. But until you analyze the entire situation, you can't really say that with any real authority.
No, of course. Well, anyhow, it's funny because a mutual friend told me this morning that a car that they were leasing, they were on a joint loan together, and the car dealer called up and said, "Oh, I understand your husband had died. We have to do the credit just on you." And I don't think that's legal. Is that correct?
To be honest with you, Neil, I'm not really sure about that, whether or not they can move the credit directly to her. That's something I would need to look into. But I can tell you that, you would want to look into whether or not it's beneficial to keep that vehicle, because in a bankruptcy, if it became appropriate for the wife to file for bankruptcy, she would have the options deciding whether.
Well, I mean, they're not filing for bankruptcy, but at the end of the day, these are things you have to consider. We do all this planning and this and that. Ownership is so important. And one of the things when we talk about ownership of assets, and I know this isn't your area, Adrian, per se, but life insurance is a very interesting product, and annuities is a very interesting product. Ownership, when you own something, it's part of your estate. If you have something in a trust, it's owned by the trust and it's outside your estate. So we've talked about this in the past about buying life insurance inside what we call an irrevocable life insurance trust. So therefore, when you pass away, that money passes away federally tax-free to your heirs and estate tax-free because it's outside your estate. Very interesting. So there's all kinds of things that come into play in planning. And if you're a small business, we highly recommend that you have a retirement plan to retain employees, okay, to keep employees happy, and to protect yourself from creditors, because that money inside your retirement plan is protected. Isn't that right, Adrian?
That's correct. Retirement funds are exempt assets, both inside and outside of bankruptcy.
Amazing. Exempt assets. And what else is exempt?
What else is an exempt asset? It depends upon whether you take the federal or the state exemptions. And that's a discussion that we always have to have in the context of a bankruptcy. We look at, again, the big picture to see where the client would benefit the most. So an exempt asset would be, in some cases, up to $190,000 of equity in your home.
Right. So these are things. These are things you need experts for. I have to be candid with you, Adrian. I hate talking about bankruptcy. I like talking about saving and protecting money. I don't want anybody ever lose it. So as a planner, I'm always looking for my clients to be super successful and protect themselves adequately. But at the end of the day, on the other hand, we run into situations where you're the caregiver for your parent and they have a crisis. And what do you do? What assets do you sell? This all comes into play. But life insurance and annuities are fixed assets. And I can tell you, if you apply for college or your child applies for college, those assets are exempt from any what they call FAFSA application, which is what you use for student aid. So if you have children and they're getting ready to go to college, or you're a young person, these are exempt assets from colleges. And they say it right on the FAFSA report. Do not include any money in any retirement plans, annuities, or life insurance. And you can put indefinite amount. There's no restriction to how much money you can put in a life insurance policy. Did you know that, Adrian? No restrictions.
I did not know that, actually. That's right. Very cool.
Not only is there no restrictions on how much you can put inside a life insurance policy, but the money in there grows tax deferred. You can take it out tax free. It has a side benefit of death benefit being tax free. And the hugest benefit is it's credit shelter proof. How crazy is that?
That is a huge benefit.
Sorry, Adrian. My clients aren't coming to you so quick. But
I like to see everybody succeed, and I like to help them when they need it.
But you know what? It's so key to have Adrian in your corner if you run into a situation. And sometimes don't take it personally. It's all, they say it's all business, nothing personal. I mean, some of the wealthiest people in the United States have done bankruptcy. I hate to mention the former president. He's used that many times. So bankruptcy is a real tool. And it's not just bankruptcy. It's making sure all of your assets are properly prepared, not only for your retirement, but are tax efficient in retirement, whether you're taking tax efficient dollars out, tax-free dollars, or tax-deferred dollars, or you're leaving behind tax-free dollars, or you're protecting those dollars from your creditors. These are all things you have to consider when you're doing planning. You're listening to the Main Street Code for Financial Success. If you ever want to get a hold of me, ask me any questions, you want me to cover something on the air, you can reach me at 631-647-4694. Always visit me on my website, mainstreetcode.com, and Adrienne Woods. How can I get a hold of you, our guest?
You can reach me on the telephone at 917-447-4321, or you can reach me via my website at www.woodslawpc.com.
Have a great afternoon, everybody, and a wonderful weekend. Thanks again.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.